going on? Today we're going to talk about cash secured puts. They're great for making weekly income. I used to do them a ton, but now I'm going in more to the SPAC area. And I used to trade TQQQ, which is a triple leverage stock. Well, it's an ETF of the NASDAQ 100. And we all know how the NASDAQ 100 has done this year. I mean, this stock was down to literally $17 at one point, and now it's 107. So it's a great way to make weekly income, monthly income. It's mostly passive if the stock trades flat, up, a little bit down, depending on your strike price you pick. But I love TQQQ because of their premiums are outrageous. Like, look at these guys. We're going to go to sell put. And recently they did a stock split, so the stock was trading at $214, but now it's half that. And I mean, look at this. You can go all the way down to $100 and receive $163 by next week. You're like, Jack, how does this work? So basically, what you need to do, cash secured puts, is capital. You need a lot of capital because option contracts are times 100. So if this share price or strike price is $100, you need that times 100 because it's 100 shares you're using as collateral. So that will be approximately $10,000, and and then you're thinking like, what do I do after that? So you have the collateral. What do you do after that? So you have $10,000. You would click this, and you would receive this credit of $163. And as long as the stock price stays above that, you keep this full amount. And then you're thinking, okay, what happens if it drops a lot? Say if it goes below $100. And so this break even price still accounts for selling puts. So if a stock trades at $98.37 at February 19th, you're break even. That's what break even price is. But say if it does go below that, say $98, it's not like regular options where you're just buying calls, buying puts where they expire worthless. Okay? You're just going to have to buy 100 shares at $100. That's the worst case scenario. Okay? So mostly I try to pick stocks that I believe in, or I think I have have a trend of an upward trend. So TQQQ is literally the NASDAQ. So I think the NASDAQ's going to be going up here in the next 4 years. So I'm not worried about holding 100 shares. And if I do get a sign, I can always sell covered calls, and we'll talk about that next video. So first you need is a collateral, and then I like to pick a safe strike price to guarantee that most likely I'm going to receive that full amount by the time February 19th rolls around. It just has to trade slightly above it, at it, or I have like a little bit of cushion, which is $98.38. So that's basically what covered or cash secure puts are. So for stocks such as Blink Energy, which is an EV charging company, the more volatile these stocks are, the higher the premiums. So this moves like 5 to 10% a day. I mean, look at this. Look at the 3 months on this. It went from $10 to a peak of $60. So if we trade options, this is expiring in 2 days. Like, let's go to sell puts. What are the chances it drops another? I mean, what's that? 15%, 12%, and you receive this amount. So even for next week, which is February 19th, I mean, look at this. You can go all the way down to 100. You can receive $100 for the 44 strike price. I mean, I really don't think that stock's going to go down to $44. I mean, you never know, but I really don't think that, especially with how this trend has been going with the stock. It has a relatively nice upward trend. It does pull back and go up a lot, but I do believe in this company. So, I mean, I would. Who doesn't want $100? And this isn't. You're not even working for this money. You just have to click this. You receive this credit. Continue. I don't have the buying power. I just have $100 in this account. Um, yeah, that's how it works. If you guys have questions, please leave them in the comments. But that's gonna be it. And next video we'll be talking about covered calls. So please like, comment, subscribe, and I'll see you next video. Bye.